The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 11th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, well, that is something we must master each and every day. So let's begin with an empowering belief. I love this. This is called enjoying true success. You know, the key to enjoying true success is to respond instead of reacting to life. Because when you respond versus react, life will start responding to you. Think about that one, folks. Respond versus react. When we trade the markets, respond to your signals and the markets. Why? Because then the markets will go ahead and start responding to you. Life has a way of reminding us that the things that are easy to do, guess what? They're also easy not to do. You know, trade patterns out there, folks, they are. You want to trade patterns, candle signals, the whole kit and caboodle. Remember, successful people always do the things unsuccessful people don't. After all, the only thing that life asks of us, of you and I, is that we make measurable progress in a reasonable time. Begin your day, begin your week, begin your month, your year, your life with a dream. Why? Because your dreams are a direct projection of the kind of life that you want to lead. Make sure they're big and colorful. You know, get up in the middle of the night. Make sure that you're dreaming the right dream. Sometimes you got to fine-tune it. When you allow your dreams to pull you forward, guess what, folks? They unleash a creative force that can overpower everything and anything that gets in your way. Enjoy your true success. Live your dreams. Let that be you. Let's go check out these markets here. Right now, we've got the Dow is up 135 points. Trade out at 15,427. S&P up 15 at 1668. NASDAQ up 33 at 3554. Russell 2000 up 8 points at 1029. NDX up 32. The leader in the clubhouse is the New York Stock Exchange still. That is very bullish. It's up 107 points. It's up 1.1% out there. You've got net... You got 271 declining issues, 2,608 advancing issues, a net of 2,337. In order for the bears to actually take control today, you'll have to see a reversal amongst reversals. Not that it can't be done. Anything can happen in these markets out here. That's why we use stops whenever we are trading. In order for the bears to take control, you would need 2,047 net declining issues, not 2,329 advancing issues like we have right now. Our call number is 877-927-6648. Give us a call, folks. Would love to field your question. If you've got a question about a pattern or something that you're trading out there, every day we should always do something that makes us feel a little uncomfortable. And if it's uncomfortable to call into the radio show, boy, that is a thing to do out there. I'll help you. I'll guide you. I'll give you whatever information I can to answer your questions so that you can become a better technical trader. Right now, we're taking a look at the ES Mini 120-minute chart, just simply starting here because just taking a look at bullish and bearish candlesticks out here. Right now, we have the bears. They've been defending this line out here ever since last night, in this case here on the 120-minute chart, up at the 1667 level since 3:30 last evening. Formed a first bearish candle out there as price got into the top of the rising price channel. Let me go ahead and pull this back here just didn't mean to do that necessarily, but I did it anyway. Let me see if I can, we'll leave that in the black out there. And you can see a rising price channel here coming off of the lows from June 24th out there. Price running right into that level. And we saw a first bearish engulfing candle out here. Came in at 3:30. A little bit of follow-through during the 5:30 a.m. session, then a little bit of a test as we came into the market open, which you would expect. And now what we're seeing here, this candle doesn't complete until 11:30, so it's got some time to go. But you get a close below the small-bodied candle from 9:30. That open was at 1665, and right now you're trading at 1663.50. That would be your bearish reversal candle. And that bearish reversal candle would be nothing more than a retracement out here. A retracement or if you saw any kind of real reversal here, you would come all the way back down to the bottom of the rising price channel. But you got to take things one step at a time. If you take a look at retracement levels, first place I would take a look at is coming off of the 130 time frame from July 5th, 16.1075 all the way up to the high that was put in. The dead cat bounce would take it to 16.45. You can see at some point in time that's probably where the market will head to, and it will then test the bottom of that rising price channel. That's the place where you want to go ahead and take a look at getting strong, long, the whole kit and caboodle, unless that rising price channel gets pierced out there. That is on the larger retracement of swing points. If we take a look at a little smaller one, that would be coming off of the Uncle Ben comments yesterday at 2:30 in the afternoon all the way up to the high that was put in. Your dead cat bounce takes you to 16.57. Maybe it's 16.51 out there. You're at 16.63. So that should be, a normal. At least on the 120-minute chart. I think we'll see the same thing on the 60, same thing on the 30. And what's really taking place out here, if you take a look at that 120-minute chart, it's working off an overbought condition. If you take a look at RSI in the extreme overbought level, it needs to get worked off. It's going to do that by either moving sideways or pulling back. If it moves sideways, it's just simply garnering some energy to move higher and move stronger out here. If we take a look at the other pattern that really completed right around this level, 1672 was your 1.272 butterfly. So somewhere in that range between 1667 and 1672 is where you also have another reversal. So to see some type of potential pullback here where it works off the oversold condition, makes a lot of sense. Whether that really starts right now, it's going to take place at some point in time on this 120-minute chart out here. Let's go take a look at the actual indexes, the ETFs. Let's go see what we have going on inside those. We'll start off by taking a look here at the New York Stock Exchange, gapping up today and completing the A to B equals CD pattern, getting up to 94.85. That was your 1-to-1 A to B equals CD. It is now up and over the June 18th level. I suspect we will see the June 18th now hold as a support level. That is 94.12. 05 out there. You can also say whether it's June 18th or June 19th, you can give it a little bit of room. The high of 93.97, that could be the next support level inside the New York Stock Exchange. Once you're up over a resistance level, old resistance, in this case here in the New York Stock Exchange, it wasn't tested. It was in the S&P 500. We'll go take a look at that. Remember, old resistance always becomes what? It becomes new support out there. Here, we're taking a look at a 1-to-1 A to B equals CD. Now, there's a lot of reversal patterns on this. This actually, today, setting up a 0.786 Gartley sell pattern. Let's go ahead and draw that in. It's the New York Stock Exchange we absolutely, in my opinion, want to be paying attention to. Nobody else does except all of us here at TFNN. Here is the pattern that's set up, 0.786, says 0.707, but really 0.786 Gartley sell pattern. You can see it's got that nice 2.618 B to C expansion out there, but not a reversal signal today. And, folks, whoops, I didn't mean to delete that. I didn't delete it. I just moved it here. Let me widen this up again. There we go. Folks, even if this were to turn into a shooting star candle today, which right now is what it looks like, just slightly out here, what you always have to do is you have to come back. Let me get rid of the A to B equals CD because we can always put that in. One of the mistakes that you don't want to make when you're taking a look at the candlesticks, and quite frankly, it's not really taught anywhere, but, a lot of people talk about gaps, and I love gaps out there for a number of reasons, but let's stay on track here. Let me just find the tool. What you always want to make sure that you do is that you take a look at yesterday's close when you're taking a look at a candle, and that you go ahead and you color it in. I'm going to go ahead and turn this one into a green. The green machine out here, just so we can match the actual candle. And this is what right now today's candle looks like. I guess can I grab the top of that? There we go. So I pull that over here. So if we take a look at, I don't even think I grabbed it that much. There we go. Okay, there's my artwork. Let me blow this up on the screen. So if we take a look here at yesterday's close, which was a doji candle. Yesterday's close, in essence, would be filling in the gap, would be where today's equity would have opened. And if you take a look at that, folks, that is I take a look at candles, I rank them between 0 and 10 to figure out strength. If you want 10 to be the strongest, that is a 9 out there today. So you wouldn't be, even though you've got the Gartley sell pattern out here inside the New York Stock Exchange, it would require, in this case here, in order for it to really be bearish, you'd have to get back below the close of yesterday inside the NYSE, and that is down at 93.40. I don't anticipate that we're going to see that here right now, and not today. So that sets up support inside the New York Stock Exchange now being June 19th. That is the way it's playing out, and it sets up really the next move inside the NYSE up to 95.06, and where you did have an island reversal candle out there. You get inside that level, you get inside actually the 94.76 range. It closed inside 94.76. NYSE will want to go ahead and visit the 96 and 95 level. Now, let's go take a look at the S&P 500, see what she is doing out here. And we're going to take a look at the VIX and the S&P 500 as well. But let's start off taking a look at the S&P 500. We know that in this case here, the S&P did test the resistance level yesterday, closed below it. Again, that resistance really being the June 18th swing point high, 1654.19. Now that becomes, it was tested really twice. It was tested, we're going to say, on July the 9th. When it got up to 1654.18, closed at 1652. So we had two successful tests of a resistance area. Now that you are up above it, not you, but the S&P 500, it says that becomes your support level. You get a close back below it, and you get a close back below it. What's going to happen is you're going to probably get right back beyond that little rising, that little trend line coming off of the November 16th area. And so if that were to take place, that would make us step back and say, uh-oh, maybe Uncle Ben decided to deliver the sugar-free version of his Kool-Aid out there, and the sugar fix might be gone. But right now, the sugar fix is in, and you're going to find some support out here. We should find support at about the 1652 level. S&P 500 wants to go test the May 22nd high and get out to 1687. Now, I don't mean it's going to test it necessarily today, but it does want to get out there and test those highs. If we go take a look at the SPYs out here, see what the actual SPY is doing right now. Take a look and see if we've got any volume yet inside this market. We normally do during the first hour of trading. Let's get rid of the A to B equals CD pattern. Of course, this too finishing the 1-to-1 A to B equals CD, and also finishing a Gartley sell pattern. Let's go ahead. We'll draw that pattern in here first, and we'll go take a look at the volume. The Gartley 0.786 says 0.841. Looks like that right now. You can see the SPY off of its session high, but you need to expect that because we were taking a look at that 120-minute chart, taking a look at the the overbought area, a little bit trying to form a little bit of a bearish engulfing candle. Again, it's got another hour and 15 minutes before we would find out whether that actually took place out there, but it just has to work off the oversold territory. So in the case of the SPYs here, it should find resistance right around the high of, June 18th is 165.99, June 18th, 165.89, right around those levels out there. The SPYs here so far gapping up this morning, doing it with 30 million shares already. Yesterday, 121 million shares coming into now the 243. Maybe it's going to be the top of May 22nd where we start to see a bit of a reversal in the marketplace as you see a potential failure. But got to wait till we see it get up there. Again, that high is 169.07, 243 million shares. Hey, if this volume here were to keep up at 30 million, we could end up with a 150, 160, 170 million share day. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 130 right now, S&P up 16. And if you haven't had a chance, you should make your landing page TFNN homepage. And if you did have that as your homepage, what you would see out here is you would see that today we have released the Technomental Commodity Report by Andy Hecht. Folks, you get a free trial for a full 30 days, a full month out there. So just go to the homepage at TFNN.com, sign up for it. It's going to take you all of about, 45 seconds, maybe a minute or what have you, with incredible information. Andy is our newest addition here at TFNN, has a fabulous show every Tuesday and Thursday. He's the warm-up band on Tuesdays and Thursdays for the Tom O'Brien Show. Again, it's the Technomental Commodity Report by Andy Hecht. Get over to the homepage of TFNN.com, sign up for it. You got access to it for a full 30 days. That is a deal. Let's go to Mark in Concord. Mark, thanks for calling. Thanks for holding. How you doing this morning?
Roses may be red, violets they're blue. When I'm confused on the market, I call Steve and Tom. Hopefully, they know what to do.
I love it. I love it. Hey, I like that one. We're gonna have to use that. I like that. Very good.
Tom did about 2 years ago. So
that's all right. That's all right.
Tommy
liked
it. I heard it for about 2 weeks on the intro to his show. So he beat you to it, my friend.
Oh, okay, no problem, no problem.
Hey,
so you got some questions on the S&P, clearly.
I do.
So yeah,
I do. I'm just basically confused. I keep looking at the charts and I keep listening to everyone, and everyone says we're going to have a correction. We're going to have the market's going to turn. But then I turned the futures on last night. The futures are up 150, and I looked this morning. They're up still 140, and I see the market's up again. I'm saying, okay, how much money did I not make by being in the market and not being long? I mean, I know that all of these patterns can repeat themselves. But I say to myself, everyone says be cautious. We're going to have this correction, so I'm sitting here waiting for this correction to happen. I don't know. Maybe I should go take a vacation in South America. go down and see my in-laws down there in South America or something. I don't know.
Hey, that sounds like a good idea no matter what. I mean, you can do both. No reason that you can't do both. So you can trade, and the first thing is that you got to get I need to understand, what's the time frame. And so the time frame with regard to trading is really key in being able to make your decisions. And it could be different time frames for different accounts. So you might have a different time frame decision-making process for your 401k funds than you would for, a shorter-term trading account. And so the first thing is being able to understand what those time frames are. And look, I am the first one to look based on all the technical work that I've done, the volume that we had on the way down here, the way down meaning off of that May 22nd high, and the being in the 6-month unfavorable seasonal cycle, said that 1479 is really at a minimum where the S&P 500 was headed to. That doesn't mean that it can't get down there at this stage, but what you have to do when you're taking a look at the market is you've got to take a look at what we do here on the show is we're assessing it one day at a time. And primarily we're taking a look at more of the shorter-term phase. If I go take a look at, and I'll switch over to another chart out here because this hasn't changed. And if you, for example, in my newsletter, what I do is I lay out for subscribers a different time frame. So they're taking a look at a midterm time frame, a weekly chart. They're taking a look at a monthly chart to understand what the overall picture is. And that might make that, and that way I feel like it's making it easier for them to make their trading decisions on their money out here. And if we take a look at the, it's in a different tab out here. Give me a moment to pull this back up. If we take a look at the S&P 500, give me a second to do this. I apologize. I kind of had a little bit of a brain fart there. It happens every now and then. I'm going to pull up the monthly chart of the S&P 500. And the key here on the monthly chart is this. Is that, the S&P, what it did last week or on June 24th was it came back and it tested that swing point here from October 31st, 2007. And the top of that was 1576.09. It's the first time that we've seen a test of that swing point since the breakout. And whenever you break out of a consolidation range, which is really what we have here, you got a 16-year consolidation range in the S&P 500. It's an 800-point range. We took a look at light sweet crude. We take a look at that consolidation range. It's a 14-point move. Earlier in the morning show, I looked at ExxonMobil. If it breaks its consolidation, it's got a 7-point move to the upside. Is it guaranteed? No, but you also have your stops. You've got relatively tight stops here. Well, I would have to say on the monthly chart for the S&P 500, if we really saw the low come in last week, Mark, and you have to stick through the break, and that 1576 was tested, and it was tested here. It's basically saying that the next move is 800 points on the way up on a monthly chart. This is where your horizon, your time frame on your horizon is really so key. When we come back, we'll take a look at the 3 different horizons, daily, weekly, and monthly with Mark from Concord, Massachusetts. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now up 111 points, S&P up 14, and we're going back out to Concord, Mass, to our man Mark, and we're taking a look at the S&P 500, and we're going to go ahead. We're going to take a look at 4 different time frames during this 15-minute segment out here. Now, Mark, a question is there a specific time frame that you that works for your trading style or the money that you're trying to manage in and out of the market?
I guess when I talk to some of my friends, some of which listen to TFNN, some who don't. Yes.
Yeah.
And everyone says, and this is a general consensus, Steve. This isn't me specifically. This is friends of mine who I associate with, and they all say, well, we hear there's going to be this correction.
Correct.
We hear that we shouldn't be long. We hear that you better have your powder dry to keep your stops in because we think we're going to go down, all this kind of stuff. And then we have a day like today. And it's very difficult for anyone, including myself, to say, okay, everyone says we're going down. I wake up in the morning and the futures are up, 140, 150 on the Dow futures.
Sure.
On this. And I kind of scratch my head and say, okay, now, if Now, in fairness to the discussion, Tommy last night did say we're probably going to have a 15-point pop in the S&P, and he said there's probably not much to it. And I said fine, but I'm just talking not only myself. I'm talking my friends, and you know from prior calls that I have a consensus of people who I talk to, and I share my information with. You know, we basically have a 411 session, and we share information back and forth, and everyone says, they say to me, hey, Mark, you heard him, this guy from Steve Rhodes, whoever he is, and this guy, Tom O'Brien, that we're going to have this big correction. Well, you know what the market did today? Yeah, I know what the market did today. Don't remind me. So you understand.
So again, Mark, the key here is really time frames. And I'll just give you an idea. Like right now, as we speak, I got up this morning pretty early. I was up at 2:30, 3 o'clock, and I put on a short trade in the ES Mini in the S&P 500. Now that trade is nothing more than a short-term trade out there. You know, I got a pattern, a little divergent pattern on the 30-minute chart that I love to trade, and when I know, and the trades don't always work. What I do is I've got my stop was in place. My stop. And what I've taught myself to do, and it truly takes the word that I'm looking for, consistency. You just simply have to, when your signals occur on any trading pattern that you're going to trade, you got to take all trades. That's just simply the way that I do it. And you do it by identifying stops and your target area. So that trade was in, and I just simply went back to sleep. You know, I like to wake up and know whether or not I'm still in the trade, but it's not going to affect me taking the next trade out there. Now, when we take a look at the markets here, it is so important to take a look at time frames that people are trading on, because I'm not short the general market right now. I was up until I got stopped out today, but I am now changing my position until the market gives me more information. And that stop that I got stopped out on was more on a daily. This is an intraday trade that I'm short on right now. On a longer term time frame out here, what we have to take a look at in the S&P 500 is this 16-year consolidation range, and that means that the 1576 level is a key area of support. Maybe it's a level of the high here from March of 2000, which is 1552. We'll say 1550 is a key level. And the 1576, that got tagged last week on June 24th. And it was the first time after we've seen a breakout on daily, weekly, monthly chart of the S&P 500 where the market came back and tested that. That's key, because any time that you break out of a consolidation level, you expect the market to come back. Now, the 6-month unfavorable seasonal cycle said that we should really come back into the 1470, 1480 level. With incredible probability. That's all trading is probability. Well, what has stopped the S&P in its place right now has been this 1550, 1576 level. If this is really a breakout here and people didn't have their money invested in the market, it's about the easiest trade you could put on. Because, again, your reward to risk, this is longer-term funds out there, you're looking at longer-term an 800-point breakout. 800 points. It's not going to happen overnight. It's not going to have weekly. And what I can guarantee you on a daily basis, you're going to see days where the market's up 100 or 200 and then down 100 or 200. That's just simply part of what goes on inside the marketplace, especially when you have somebody interfering like the Fed on a consistent basis. But as long as this consolidation area holds, then you're clear. Now, the S&P 500 is the weakest of the indexes out there, the exclusion being the New York Stock Exchange. So the small caps are way above their highs out there, their consolidation range. The composite way above its consolidation range out there. So there's a lot of reason to believe, even if the S&P came back into this trading range here, came into that 1470 area, I was still expecting that to really be a buy, even though it get back down inside the trading range. It'd be risky. But right now, that trade on a longer term basis, you'd be risking from 1660 to 1576 right now. You take a look at that difference versus 800 point, and I know the reward to risk there. That's with regard to long-term funds out there, but you got to be willing to take that kind of heat on a longer-term trade. That's what the monthly says. If we take a look at what the weekly says out here, Let me turn over to the weekly chart. What we can see is that the S&P, going back to March of 2009, is in this rising price channel. And even with the S&P, which, and it still can come back to 147.50, look, it wouldn't completely surprise me for that to still be an outcome out here. And if it does come back to 1470, 147.50 in the SPY, 1470, 5 or so inside the S&P 500, as long as it doesn't really crack this rising price channel, it's just doing normal things, normal price movements inside the market out here. The SPY, they came back and tested that 157.52 level. That was the swing point from October of 2007 out there. So even on a weekly chart, it hasn't broken its trend. The daily chart, a little bit different story, because on that daily chart, if we go take a look at the, let's take a look at the SPY out here. We'll put that up on the screen, because that's the easiest for you or your friends to see, is that the SPYs were coming down with volume. And when markets come down with volume and they go up with light volume, it's a bad scene. It's always a bad scene. We can go through stock chart after stock chart, because I do it every day in the show, and we take a look at what's popping and dropping. We haven't done any today. But when they drop, they always go back down to a high volume low out there. And in this case here, what we do know right now on a daily basis, and so it doesn't change the longer term chart, the monthly, it doesn't really change the the weekly chart out here, but on the daily chart says, you know what, one little thing that gets off kilter here, and getting back and testing the June 24th area is where the market would fall to. It will just simply do that. Now, is it going to do that today, tomorrow? Is it going to do it after it tests the high on May 22nd, or is it never going to do it? I can't really answer that question. I know it's a bad scene, without a doubt. When the markets go up on light volume and they come and they have come back on big volume, because when things do crack, they're always going to go back down to those high volume bars out there. And in this case here, the further that the markets pull away from us, at some point in time, mark my words on this, when it pulls back, it'll pull back to a high volume bar. If that ends up being June 20th right now in the 158.98 to the low of the 158.98 to 162.10, that's not much of a pullback here right now. Now, that's on, so we've taken a look at monthly, at weekly, and at daily. But if I go over and take the futures, which I trade the S&P futures, the ES Mini, all the time, and on different time frames. And right now, if we take a look at, here's the 120-minute chart. We'll go ahead and populate that on my screen. I believe we'll do that here in a moment. And on that 120-minute chart and on the 30-minute chart out here, it says we're up at the top of the trading range. So last night at 2:33, I'll put the actual 30-minute chart, because it was based on the 30-minute chart. I actually had a signal that was sent to my phone, my cell phone, to make me aware that the pattern that I like to trade had just completed. And that was right here at 2:30 in the morning. And I got up. I took a look at it. I said, okay, the market is in a oversold, overbought territory. It had a divergent pattern that I like to trade, and I just simply went ahead and fired it away. And my stop on this trade, it was pretty simple. It's always 2 points above the high, which was 1669.50. I could actually pull that thing over on the screen here for you, but I don't want to give away my account numbers. I don't think that it's in there. But I'll throw that up here. Here's the trade. I'm not BSing anybody. Here's my trade. You can see right now it's a $1,355 profit inside that trade on the ES Mini, and so that is on a shorter term chart out there. You can see my stop here, right here, 1669.50, and my target on this is right down around 16. Buy it back at 1652. Now I may change that 1652 and adjust my stops, but that's on a shorter term trade that I'm trading inside the ES Mini. It's all based on different time frames out there, and that's the real key, is if you can get the time frame with regard to the bucket of money that you're trading and stay with inside that, then you don't have to worry about all of the stuff we do on the radio show. It's more about what's going on right here, right now, more from an intraday standpoint as opposed to that longer term basis. And that's my view of the market. And again, it's different on each time frame. My retirement funds, I'm still in the trade. I'm still long. And I have been. My newsletter, for any of your friends that would get my newsletter, right at the top of it, it tells you, and even throughout the newsletter, it tells you what your long-term, what your mid-term, whether I'm bullish or bearish. And sometimes in the shorter term it gets confusing, because even though the signals are bullish out there, I'm trying to catch a reversal. and and so going short for the different time frames. But the key is finding the pattern that you're going to trade, and when those patterns, when they hit, you have to take them. And if you and the best read out there probably to help you understand that is Mark Douglas's book. What's it called? Trading in the Zone out there. And then there's another book out there. I forget the guy's name. It's called Fooled by Randomness. I forget the author of it. But another great book out there. And what you really learn is if you go back and you do the homework and find patterns that give you consistent profits out there, and you realize, what's happened. What'd you have for dinner last night? Just curious.
Fish.
Fish. Okay, great. So you had fish at home or at a restaurant?
Home.
Okay. Now, you and your wife make kids or what have you. You probably, did you clean your plate? Did you throw anything away?
No.
You know what? Yeah. So in your case, my case, unfortunately, I don't typically throw things away. But what happens in a normal household is that, and we get so used to it, we get so comfortable with it, whether we go to a restaurant or we go out to, or we make a meal, we end up throwing things away that we had cooked or that we ordered. And we don't think much about throwing that away. That's really money that's going out the door. Now you paid for a meal and you say, hey, look, whether I ate that or I threw it away, it's going away. Sometimes people will box stuff up. They'll take it back home if they remember to take it off. If they take it off the table, sometimes you box it up and you forget it. You haven't done that. I do that often. But then when I do remember to bring it back home and I stick it in the refrigerator, a couple days goes by and I forget about it and it's trash day. And what do? Throw it out in the trash. And so it's.
Well, I have a way to solve that problem, Steve.
What's that? Get a dog?
No. When you put it in your refrigerator, put it at the very front of the front item in your refrigerator, so every time you open the door, you see it.
Yeah, but I see it, and I still say, it was leftovers. Maybe I want something else.
Hey, that I can change.
Yeah. I know.
But if you keep it in front, at least you'll know it's there.
For sure. But my point is more this. We get so accustomed and so used to being able to that we run our life and our like a business. And in any business that you've been in, that you've operated, you know that you have waste, whether it's in time or it's in product development or it's in marketing, where you're going after a client and you end up not getting the deal. Where all those costs become acceptable. And when it comes to trading, what happens is we don't take a look at those other costs necessarily and take a look at those as dollars. But when it comes to trading, it's always about dollars. And so what we have to do is understand that this is nothing more than a probability game. Business, nothing more than a probability business. That's why the patterns that you trade are so key. You have to have confidence in the patterns that you trade, whether it's a Chapman wave, whether it's swing points, swing trading, whether it's price divergence patterns, whatever it might be out there, butterflies, Gartleys. You've got to have enough of a experience with it to say, okay, I'm comfortable with taking each of these trades when they actually set up in the marketplace. And then what's really key is staying in the zone. And staying in the zone means your time frame that you're trading on. You need to know what's going on above you and below you, see if there's any other piece of information, because it helps you to understand the trend. But this is a business that's no different than anything else that we do on a daily basis. We just beat ourselves up sometimes, and you haven't missed out on a trade. That's on a long-term basis. If we've broken out of this consolidation zone, and it's an 800-point move. If I put it to you like that over time you're looking at an 800-point move, and I don't know, is that 2 years or 3 years versus the amount of money that you'd give up right now? Do you really feel like you've missed out on a trade on longer-term funds? Probably not.
No.
Do you feel like you missed out on a trade right now? I was up at, I was the one that got up out of bed at 3 o'clock in the morning, 2:30 to put that trade on. And, and it's profitable at this stage here. You don't feel like you missed out on that trade, do you?
No.
Yeah, so, and there's another one that's going to come around. And so that's my take on just simply making sure that you haven't missed out on anything from a long-term standpoint if this is really a breakout here. All right, my
Steve,
friend.
Thank you. Don't forget you owe me a book review.
I know. Thanks so much for calling, Mark.
Okay, thank you, buddy. Bye-bye.
All righty. Right now, folks, we got the Dow's up 121. The S&P is up 15, and we'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Well, welcome back, folks, and yeah, make sure that you stay tuned. It is Thursday. That's a terrific day here at TFNN because we got Basil Chapman up next and Larry Pesavento, and I'm sure Larry's going to be spending quite a bit of time taking a look at the currency marketplace out there, as well as the commodities inside the currency marketplace. We've seen some huge moves. Speaking of commodities, light sweet crude right now, let's take a look at that. It's off $1.67, so we're seeing a little bit of a pullback out here. That's after completing a 1 to 1.272 A to B equals CD up, as well as the 1 to 1 coming off of the lows back here in July. was June 29th. That A point was 78.28. Your B point on this was the high of 100.42 on September 14th, and your C point was back here on November the 7th. This here had broken out of a sideways 14-point consolidation range, says light sweet crude wants to go and get up to the 114 level. Now, the pullback that we're seeing here this morning, after completing two A to B equals CD patterns, as well as making a 100% move of a move, which means getting back into this swing point level here from March of 2012, as well as the highs back here from May of 2012, is normal. You would expect it. The only way that light sweet crude gets bearish is if it gets back inside the consolidation zone out here, and that would get all the way back down to the $99 level. You get back inside there, that'll send up a run back down to 85. Otherwise, it's 114. That is the number that it's trying to get to. In the first hour, we were taking a look at, or I was taking a look at, ExxonMobil. That's a key stock, and we'll do that. Let me try to pull that up. That's in my core stock button. I just have to actually find it. So as we take a look at that, we're also taking a look at Intel. Intel had a nice hammer candle yesterday in a market where there was indecision. There was no indecision inside Intel. Had a hammer candle, a gap up today, so it's on its way, perhaps back all the way to the highs here of 25.98. But it is ExxonMobil that I want to take a look at, because it today is trying to break out of this 1 year $7 trading range. Right now it's just trading right at the top of that level. Volume behind the move so far today, 3.5 million shares in the first hour and a half of trading, and that's going against 19 million from May 22nd. So if you can get above, we'll call it 93.50-ish. Out here, it's trading at 93.55, and you do it with volume. If you do it more than 20 million shares today, then we're gonna see a breakout inside ExxonMobil. Let's go take a look at what else is going on inside the spider, inside the energy sector here right now, because that is what ExxonMobil is the leader, and a big weighting structure with inside that. Now, yesterday was a key reversal, bearish engulfing session. Today you've moved up a little bit higher, so you're not getting the conviction here with inside the entire energy sector that it is ready to break out. But that's on the daily chart now. If we go take a look at the weekly chart for the energy sector, let's go see what it is doing out here, just so we take a look at it on different time frames. Again, that's the XLE that we are taking a look at, and it should be right in, it was right there, dab smack in front of me. We take a look at this. Here's the rising price channel of the energy sector. I think it's the fifth weighting structure inside the S&P 500. You can see this is coming off of the trend line all the way back here from June of 2012. And that trend line has not been broken. It's been tested, and in fact, we had a test of it on the day of June 24th, the week of June 28th out there, and that level has held. So it's in a nice little rising trend out here, and says that you get a close inside the May 24th level. Again, a weekly chart we're looking at. That May 24th low is $80.85. You're at $81.44. This says that it'll go up and it'll test the $83.95. So that's taking a look at this on multiple time frames. Stay tuned, folks. Basil Chapman is up next. My apologies. I will not be able to be with you tomorrow or Monday. Having a little bit of oral surgery out there. So you'll be in good hands with Tom, Basil, and anyone else that might cover. So have a great weekend, and I'll look forward to seeing you on Tuesday morning. Take care, folks.